Who would benefit from such an agreement and how? Which countries would be the winners globally and which the losers? Does such an agreement strengthen or weaken the European Union? Over the past few years, bilateral trade agreements have been signed or negotiated in many parts of the world. Very soon, it will be the turn for the biggest one so far. A free trade agreement between the European Union and the United States of America. The so-called Transatlantic Trade and Investment Partnerships, or simply TTIP. That would create the world's largest free trade area! Just think what that means. This thing is going to be much bigger than you probably expect. For this reason, we decided to have a closer look at the agreement with the help of the expert of the IFO Institute in Munich. We asked them to calculate the economic effects of such an agreement for 126 countries. They have calculated two different scenarios for us. In the first scenario, the USA and the EU agree only to reduce tariffs, which would have slight positive economic effects for both parties. If instead we project a comprehensive agreement, there are massive economic gains evident on both sides, with the US side clearly getting more than the EU. Nevertheless, 2 million new jobs would be created in the OECD area. But what does it mean for European countries? Do really all EU member states will do better? The answer is yes, but they would. But not all to the same extent. The greatest benefits go to those countries who already trade a lot with the United States of America. And the one that tops the list is the United Kingdom. So it's not a really big surprise that the British government is a big fan of this EU initiative. France, on the other hand, gains less. It trades only comparatively little merchandise with the United States of America. But what about the crisis-ridden Southern Europe? Italy, Portugal, Spain and Greece? They too would benefit from a comprehensive agreement. In fact, they do even better than average. Spain, interestingly enough, would actually be one of the biggest winners, since as a result of the agreement, it could replace expensive European goods with cheaper imports from the USA. A change that would be reflected in the real income of Spaniards. Briefly, it looks like such an agreement would not increase economic disparities within Europe. Now let's have a closer look at the losers and the collateral damage that is caused by such an agreement. First of all, the traditional trading parties of the US and the EU, such as Mexico and Canada for the US or Norway for the EU. If those countries do not manage to sign a parallel trade agreement of that kind, they will, as you can see, experience substantial losses. Moreover, it would also hit certain developing countries in Africa and Central America. Diverted trade effects will bring economic losses to countries like Niger and Botswana or Guatemala and Jamaica. Okay, let's sum it all up. In purely economic terms, the USA and the EU will benefit from TTIP, especially if the agreement is comprehensive. The hard losses in real income for certain developing countries should give us pause, while hopes remain that TTIP will strengthen the general readiness of all countries to engage in the Doha multilateral trade negotiations. Long story, short wrap up. So long for now. Hope to see you very soon for the next GED Short. This is Uli Schof and the GED team.